Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in today's financial world. And let me tell you, the report we're diving into today has some twists and turns that will make you say, wait, what happened there? Get ready, because we're about to peel back the layers of a company that has been through a major glow up. From diagnostics to digital finance, stick around as we decode their latest financial report and see if this business reinvention is paying off. And if you are all about getting the real scoop behind those official documents, make sure you hit that subscribe button right now. We also have a fantastic Discord community where we break down these reports even further. So join us there too by checking the link in the description. Alright, let's get straight to it. We're looking at a Form 10Q, which is essentially a quarterly checkup for a public company. This one is from OpGen Incorporated, and it covers the period up to the 30th of June 2025. Right off the bat, you see they're a non-accelerated filer and a smaller reporting company, meaning they're not the biggest players on the block, but they've got a story to tell. Let's jump into the financial heart of this report, the balance sheet. Think of this as a snapshot of what the company owns and what it owes at a specific point in time, between the 31st of December 2024 and the 30th of June 2025. We see some big shifts. Their cash and cash equivalents actually went down from about $1.3 million to around $831,000. That might sound a bit concerning, but it is important to see where the money is going. Now look at accounts receivable. This is the money customers owe them. It shot up dramatically from just under $30,000 in December to over $4 million by June. This is a pretty massive jump and can signal a lot of things, like big sales happening or maybe a longer time for customers to pay. Overall, their total assets grew nicely from just under $10 million to over $13 million. A good chunk of that growth comes from that surge in accounts receivable. On the other side of the coin, we have liabilities. Their total liabilities also increased slightly from about $2.48 million to just over $2.57 million. So while they're owning more, they also owe a bit more. But the really interesting part is stockholders' equity, which jumped from about $7.38 million to over $10.6 million. This means the owner's stake in the company has grown significantly. A big driver for this seems to be the accumulated deficit shrinking. Remember, an accumulated deficit is basically the total losses a company has had since its beginning. It went from a negative $293.5 million down to a negative $290.4 million. That might not sound like much of a change, but for accumulated deficits, every dollar reduced is a good sign, suggesting they're moving towards profitability, or at least reducing historical losses. Now let's look at how the company is performing over time, specifically their income statement. This tells us about their revenues and expenses over a period, and wow, what a change from 2024 to 2025. Last year, for the 3 months ending the 30th of June, they brought in only $28,000 in revenue. Fast forward 1 year, and they pulled in a whopping $4 million. That is not just an improvement, that is a transformation. For the 6-month period, it is a similar story, $196,000 in 2024, jumping to $4 million in 2025. Where did all this new revenue come from? It is primarily from listing sponsorship services. This signals a major shift in their business model. They are no longer focused on their old diagnostics business, which brought in very little revenue in the prior year from product sales and laboratory services, which are now gone. Now, what about expenses? For the same 3-month period, their operating expenses dropped significantly from about $1.57 million in 2024 to just under $600,000 in 2025. This is a smart move. As revenue rockets up, keeping expenses in check means more of that revenue turns into profit. For the 6-month period, operating expenses also fell dramatically from over $3.4 million to just over $1.1 million. They've clearly streamlined operations. The result of this massive revenue increase and expense decrease is a dramatic swing from a big operating loss, over $1.5 million in 2024, to a strong operating income of over $3.4 million in 2025. This is the kind of turnaround story investors love, and this translates directly to the bottom line. They went from a net loss of over $1.5 million in the 3 months ending the 30th of June 2024 to a net income of over $3.5 million in the same period in 2025. For the 6-month period, they went from a loss of about $1.28 million to an income of over $3.1 million. That is a huge turnaround, turning losers into winners. This impressive financial performance is reflected in their earnings per S-hair. Back in 2024, it was a negative $1.18 per S-hair. Now, in 2025, it is a positive $0.35 per S-hair for the quarter and $0.31 per S-hair for the half year. This is the kind of number that gets people excited. Let's look at the statement of stockholders' equity. This shows how the ownership structure has changed. It confirms that their equity has grown. The number of common shares outstanding increased from about 1.3 million to over 10 million. This implies they likely issued more stock, which helped boost their capital. And look at the additional paid in capital section, soaring from around $294 million in early 2024 to over $300 million by June 2025. This capital comes from selling stock above its par value and is a strong indicator of successful fundraising. We already saw the accumulated deficit shrinking, and this statement confirms it, moving from a massive negative number towards a less negative one. This is a key indicator of the company's progress towards sustainability. Finally, let's check the cash flow statement. This tracks the actual cash coming in and going out of the business. In the operating activities section, which is the bread and butter of a company's day-to-day business, we see a big change. In 2024, they used nearly $1.8 million in cash. But in 2025, they used only about $645,000. This improvement, even though it is still a cash outflow, shows they are becoming more efficient in their operations. The financing activities section shows how much cash they raised or paid back through borrowing or issuing stock. In 2024, they brought in over $820,000 through financing. In 2025, this number is much smaller at around $166,000. This suggests they might be relying less on external funding as their operations become more self-sufficient, which is a very positive sign. Overall, their cash balance decreased in both periods, but the decrease was much smaller in 2025, from nearly $1 million used in 2024 to about $479,000 used in 2025. They are burning less cash overall. So what is behind this dramatic shift? The report explains it all. This company, OpGen Incorporated, used to be in the precision medicine business, focused on diagnostics. But things changed. In November 2023, their European subsidiaries filed for insolvency, meaning they essentially went bankrupt. This forced OpGen to completely move away from that business. Then in March 2024, a new chapter began with David E. Lazar stepping in and reshaping the company. Fast forward to July 2024, and AI Capital Limited took a significant stake, becoming a controlling stockholder. This is when the company really pivoted. They are now focused on financial services and technology, launching a subsidiary called Capforce International Holdings Limited, which offers listing sponsorship and consulting services. They are also planning ventures in digital investment banking and capital table management. This new business direction is clearly reflected in their revenue recognition. They are now bringing in money from listing sponsorship and consulting services, not from selling diagnostic products anymore. For example, the significant revenue increase in the second quarter of 2025 comes from completing performance obligations related to their clients' equity. Now, let's quickly touch on the going concern note. This is a standard section that talks about whether the company can continue operating for at least the next 12 months. Despite the positive financial turn, the company acknowledges they have historically incurred significant losses. However, they are now looking to fund operations through AI Capital Limited and have agreements in place that provide access to significant capital, suggesting they believe they can remain in business. They also mentioned being delisted from NASDAQ in August 2025, which is a setback, but they plan to apply for relisting. Remember that huge spike in accounts receivable. The report clarifies that it is largely due to one major customer. In fact, as of the 30th of June 2025, one customer accounted for 99% of their total accounts receivable, and in the second quarter of 2025, one customer represented 100% of their total revenues. This is a huge concentration risk. If that one customer leaves or stops paying, it could severely impact the company. They also have a significant investment in equity securities valued at $5 million, which they received as payment for services. This investment is in a privately held company and is treated with caution, valued at cost less any impairment. It adds another layer of risk and potential reward to their balance sheet. So, what is the verdict on OpGen Incorporated? They've pulled off an absolutely stunning financial turnaround in the last year. The pivot from a struggling diagnostics company to a revenue-generating financial services and technology player is remarkable. The massive increase in revenue and the shift to profitability are testament to their strategic repositioning. However, there are definitely some risks to keep an eye on. The heavy reliance on a single major customer for both revenue and accounts receivable is a significant concern. A major contract loss or payment issue could destabilize their finances. The delisting from NASDAQ, while a setback, also presents an opportunity if they can successfully relist and rebuild market confidence. Their investment in equity securities, while potentially lucrative, also carries its own risks. In conclusion, OpGen Inc. has successfully navigated a period of immense change, shedding its unprofitable past and embracing a new future. The numbers speak volumes about their ability to adapt and execute. The key going forward will be diversifying their revenue streams and managing the risks associated with their current heavy concentration. It's a company to watch closely to see if they can sustain this upward trajectory and overcome the challenges ahead. Alright, that is our deep dive into OpGen's latest filing. What do you think about this incredible business transformation? Are they on the right track or are there hidden dangers ahead? Let me know your thoughts in the comments below. If you found this breakdown valuable, please give this video a big thumbs up, and for more corporate secrets revealed, make sure you are subscribed. And I'll see you in the next one. Don't forget to join the Discord community for even more exclusive content.